Are you ready to take control of your finances and plan for a brighter financial future? Today, we're bringing you some seriously juicy tips on how to make the most of your money in 2023. From early investments to insurance priorities, we've got the inside scoop on how to achieve your financial goals. So sit back, grab a pen and paper, and let's dive into the world of smart financial planning. Picture this. You're on a boat, sailing towards the horizon, without a clear destination in mind. You're enjoying the sunshine and the sea breeze. But as the day goes by, you realize that you're running low on fuel and food. Suddenly, your carefree adventure turns into a worrisome journey. Just like sailing a boat, navigating your financial life without a plan can lead to uncertainty and stress. That's why having a solid financial plan is essential to help you reach your goals, weather financial storms, and ultimately, enjoy the ride towards financial freedom. Let us have a look at some key steps that help you design a financial plan, which will give you the best of both worlds, the sense of spending to satiate your materialistic inclinations and saving to secure financial future stability. Set budget. The first step towards effective financial planning is to create a budget. A budget is a detailed plan that outlines your monthly income and expenses. By creating a budget, you can identify areas where you may be overspending and find ways to cut back on unnecessary expenses. This will help you save more money, pay off debt faster, and achieve your financial goals. Invest early. The earlier you start investing, the better. Investing early allows you to take advantage of compounding returns, which can significantly increase your wealth over time. You can start small with a low-risk investment, such as a mutual fund or a retirement account, and gradually increase your investment as your income grows. A plan of investment earlier can give enough time to even small funds to grow into a corpus to meet financial goals. HDFC Life Quick Protect can be an excellent option for early investment in financial planning. High coverage, affordable premiums, tax benefits, and flexible options makes it a comprehensive investment option. Assess risk appetite. When it comes to investing, it's important to assess your risk appetite. Some investments are riskier than others, and your risk tolerance will depend on your financial goals, age, and personal preferences. If you are young and have a long time horizon, you may be able to tolerate more risk in your investments. However, if you are approaching retirement, you may want to focus on more conservative investments. Monitor discretionary expenses. Discretionary expenses are non-essential expenses that you can cut back on to save money. This includes things like eating out, entertainment, and travel. While it's important to enjoy life, it's also important to be mindful of your spending and find ways to save money. By monitoring your discretionary expenses, you can find ways to cut back and allocate more money towards your financial goals. Regularly review investment portfolio. Your investment portfolio should be reviewed regularly to ensure it aligns with your financial goals and risk appetite. You may need to adjust your portfolio as your financial situation changes, or as market conditions change. It's important to work with a financial advisor who can help you make informed decisions about your investments. Prioritize insurance. Insurance is a crucial part of any financial plan. It can help protect you and your family against unforeseen events, such as illness, disability, or death. Depending on your circumstances, you may need different types of insurance, such as life insurance, health insurance, or disability insurance. By prioritizing insurance, you can ensure that you and your family are protected in case of an emergency. A policy like HDFC Life Quick Protect ensures that your family can maintain their standard of living in the event of any uncertainties, by providing for monthly payouts or lump sum payments should anything happen. Moreover, Quick Protect is a quick and hassle-free plan, since you do not need to undergo any medicals to qualify for this policy. Subscribe this channel for more valuable content.